Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes and get ready to start your day, folks. Quick few housekeeping rules though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Good morning. Hi, I'm Louise Carr. Jason, welcome to Wealth Coffee Chats. Jason has entrusted me this morning to meet with you on his behalf. I'm one of the advisors at Positive Real Estate from the coaching and advisory team. So good morning, happy Thursday. I'm going to be sharing some tips about how to essentially create wealth through property creation, and especially focusing on house and land as well. So feel free to chat to me, send some messages. Hi, I can see you. Hello, hi Sonia, welcome. Nice to see you this morning. Hola, nice to have you here. So Warren is going to be sharing my slides. So thanks, Warren. To hear, we'll share my slides in a moment. I'll be driving in the background. Good morning, Luke. Hi, nice to see you. Today we're going to be talking about portfolio building, and Luke, you would be well on your way, know what we're talking about here as well. But a little bit about my background. The reason why Jason's asked me to share and meet with you all today is I'm from Positive Real Estate, the coaching and advisory team, and essentially my role is to help people create portfolio and create wealth through property investment. So what I'm going to be sharing with you, particularly today, is a focus on house and land as well. So house and land and affordability. Good morning, Bradley. Nice to see you here. Thank you for popping along and learning about all things portfolio building. So Warren, if you'd like to share my slides, that'd be great. For those of you that haven't met me before, if you're not mentoring clients and part of it, I'll put a little bit about my background on the next screen. I've been in the industry for 30 years. So I joined the industry in 1994, so back in the 90s, vintage list as well. So my role, and I've been teaching and coaching people on how to create success, how to create wealth through property investment for over 20 years. So if you can go to the next slide, please, Warren, that'd be great. A little bit about my background, and I've been with Positive for over 10 years, joining the Positive team for over 10 years. And one of the reasons why I've joined Positive is essentially seeing all the results, particularly the house and land results as well, which I'll go into in a moment. But my role is really to help to create people portfolio building, and I'm part of the 6-star team that Jason talks about here as a senior investor. So finance industry as well. Kane's going to be on tomorrow on Friday, which will be talking about all things loans and financials as well. But I do have a background in the finance and real estate industry. So drop me any questions. I'm here happy to answer any and answer any questions. So nice to have you on this morning. So next slide, the reason I joined Positive was actually back in the days of property investing magazines and Smart Property Investor, and yep, I found an old photo of Sam and Tab. You might notice them on the left-hand side there with House and Land Success. So good evening from Florida. Welcome. Hi, Karen. Nice to have you along this morning. So Kevin, sorry, with glasses there. So one of the reasons is Sam has a legend in his own right. So Sam Saggers is really the reason why I wanted to join Positive. Back in the day of House and Land, I was with a small company, and we were the first company in South Australia to bring house and land packages for investment over 20 years ago. So Rain and Horn, a real estate office there back in the day. But I came across Sam and Tab in particular because he was 6 months ahead. He was doing granny flats out the back of Western Sydney, and spending 80 grand, getting huge uplift. I was like, this guy is always ahead of everyone else that I've met in the industry and seeing around Australia. So house and land there's certainly measured success for it. It's really important, and part of what we do here at Positive Real Estate is certainly to serve and protect. But I'm just putting the house and land guarantee, which is, there's a few things with building. There can be some risk associated with it. So we can certainly talk to you how to minimize the risk. And Sam talks about that on his podcast as well. But really, the house and land guarantee, what I'm showing you today is some of the results. And also about essentially all the packages of fixed price, turnkey, and a guaranteed build time. So when you're building, it's really, really important to have a fixed price so that there's no hidden surprises or, oh, sorry, I've hit rock, of an extra 30, 50, 80 grand for retaining as well. So it's really important to negotiate fixed price, absolutely important. Guaranteed build time is another important one. Friends have built the holiday home, and their build time was 2.5 years. So if you're building, for example, especially a lifestyle property, and holding through that time, it can cost you a lot of money. So for investment, it's really important to keep your timeline short. So guaranteed build time. Sam and the team, the buyers agency, part of the 6-star team that we speak about, the Buyers Club, is going to, they have really, really tight build lines, really 20 to 24 weeks as well. Good morning, nice to have you here. So quick build time, good build time, but delivery days as well. So fixed price, guaranteed build time, and a turnkey product, so it's tenant ready. So it was really, I went through equity mining, and we're currently doing it at the moment, which is fantastic, and contacting hundreds and hundreds of our clients with their success. But I pulled out some of the top performers. So the next slide, I wanted to go back in the day and just show you how the power of property works as well. So this one back 10 years ago, Gregory Hills, New South Wales. So for those of you that aren't from Sydney, it's a part of Sydney where it's very, it's gentrification, and it's a fairly new area. So in 2014, the package price was $489,900, so it's just a smidge under 500. But today, the conservative value of this property, as you can see on the screen, is 1.2 million, so 1.27 million. Not bad, 780 grand uplift in the last 10 years as well. So the average capital growth rate, and I'm going to share with you one of the last slides, is show you actually what do these numbers mean for people. If you build a portfolio, especially a residential portfolio, what does this actually mean for you as well? Welcome, Chris. Nice to have you here. Who's built a house and land? Has anyone on the line this morning built a house and land? I'd love to know your results. Drop it into chat if you have. What was your success? What was your, would you build it again? Did you have a great success? Would you never build? What were the traps and pitfalls that you experienced as well? I'll keep an eye on the chat. So average growth rate over 10%, so conservative value. The interesting thing, the reason I chose this one, and Warren, if you flick to my next slide, please. The reason I chose this is house and land is a great way to minimize land tax. So minimise stamp duty because you're actually going to pay stamp duty on the land portion, not on the full amount. So as you've got a build time, you can get in there. So anyone with strategy-wise, where I'm looking for someone to maximise their deposits, and they've got a big good savings capacity, then house and land is a really good way to do that. And often you can save yourself thousands of dollars in stamp duty, often up to $20,000 to $30,000 stamp duty, which is great. So this client, plus good building prices, good guarantees, this particular client made $180,000 uplift in a year. So fantastic result. This was shouting from the headlines, and construction in 2014. You see there they sold it very quickly in June 2014. Now Jason would cringe, we've got a saying here, as long as it was a great result, buy well, never sell. Buy well, never sell. Sometimes or buy well, sell well, essentially. But it is one of those things. Sometimes there was a personal reason why they had to sell. It certainly wasn't a strategy to build and flip so much. But so you got some short success, which is fantastic, and that's very, very common in our house and land space for our clients. So thank you. You can go, and then I'm going to move over to Newcastle. So Newcastle has been another fantastic performer. This beautiful 4-bedroom house, 2-story. And one of my clients, it sold for, and they bought it for $444,000. Had instant equity, so they had instant equity there of $50,000 upon construction, which was great. Remembering this was 10 years ago, so it's a lot of money, a lot of good coin by buying that in a market, in a strong market. So he's again doubled his money with a huge growth, like a really strong growth rate, 0.3% as well. And the good thing about Newcastle is still a lot of growth there. It's been positively geared, strong rents as well. And then moving over to going around the ground. So as you may know, with Sam and the team, it's really important to dart in and out of markets, to buy not only in your backyard, but buy wherever there's opportunity in Australia. So where is the next cycle? Where is the next growth? We're positioned early in Brisbane, before COVID, and one of my clients, Monica, Mon bought here a 4-bedroom house in Nudgee. So it was quite, it seemed fairly expensive at the time, $523 in 2016. Brisbane at that time had been very flat, but we knew the market indicators, and we knew that she was going to get some great result here. So has anyone, Nudgee, who's from Queensland? Nudgee really well. It's one of the inner circle, inner ring here of Nudgee, and now it's worth over $1 million. So an average growth rate of over 9% as well. Interesting, I saw this recent sale down the bottom on the right hand side in Oddurki, I think is a bit of a trickster one to pronounce. It's a bit older build in 2011, bigger land size, but new benchmarks for Nudgee. So for all of you Queenslanders and people that own in Brisbane, this 1.5, so new benchmark sitting at $1.5 million for a 4-bedroom in Nudgee. So again, great records, and positioned well, had the strategy of land, lower stamp duty, good tight construction. You can see 2-story homes nearby. And that served, so quickly went to see equity. We had over 100,000 equity not too long, and that was manufactured through the build process before the market came as well. So I'm going to focus on Brisbane next. The other ones there. So if we go to the next slide, then Wynnum West. Wynnum West has been an outstanding one of the 6-star team. Sort of a few clients did a joint venture and went into Wynnum West and building house and land. So construction in 2020, get this, was, and you can see here the capital gain, so bank valuation in 2021, so capital gain of $355,000. So average growth rate, double digit, over 50%, 52.99%. And these clients messaged me when they saw us presenting it. They messaged me and said they've just rented it for $850 a week as well. So really strong asset. So great yield, built for $670. A few years later, renting for $850 a week, with strong equity gain there as well. Huge growth there, and with a lot more on its way. But if you think that's good, Brennan and Sam found this little gem on the next slide. Actually, it's coming up. There's one coming up in Wynnum I'll talk to you about. Cannon Hill. This was a strategy we adapted. And this shows sometimes you've got to adapt to the market. So where we traditionally did granny flats, and a lot of our clients in granny flats or duplexes, what happened is duplexes were going further out, and they were getting more into regional areas, which you may know be a bit more vulnerable, not necessarily type of growth. So we looked at, Sam came up and we looked at, well, what about 5-bedroom luxury homes and plunge pools? So really A-class suburbs. And when we did the maths for a good block, and you can see this one is a beautiful property, luxury properties. We call them luxury infill properties in Kill. It was a $1 build, so 1.075, as you can see on the screen. But when we did the capital growth, it was, you get 150 to 200,000 instant equity compared to the McMansions built around. So capital growth, you get capital growth from your neighbours. So capital growth, your neighbours is in first home buyers or in estates where they've got, the landscaping's not done and curtains aren't done, for example. That can bring your neighbourhood down. However, when it's around homes and very house proud people, that protects your capital growth. So neighbours do protect your capital growth, and that's seen it time and time again here. We're a conservative value now 1.6. There's aim for 1.8 there as well. So adapting, A-grade quality real estate rather than being further out with Dupy, and there's certainly great opportunity for that here. So then now's the next opportunity. The next one I think is the one that I was building up to before. So this was shared with our clients. So I just copied and pasted it this morning. So I wanted to share it with you. Excuse the font and graphic. But brace yourself, 72% in West. So Wynnum West again. You can see a few facts on the screen. Some of you might be phoning in. So I know Luke, Bradley, welcome in, probably on your phones here as well, joining us today. But certainly, it was 2021. It's an infill. Now this is a small parcel. It was a 300 square metre parcel of land. There is if you go onto realestate.com and search for 6 Rushi Place at Wynnum West, you can find it. But there's there was some delays. There was build completed. There's a bit of COVID delay as well. So okay, the client knew this and knew it would be a little bit longer, building in that time. However, there's great result at the end. So patience is a virtue. The maths, we knew that there was going to be some great uplift as so locking in the prices, but $430,000 uplift. Or otherwise over 72% as well. Thanks for your question, Cutlery. So what's the average home price in your area? Which suburb which area do you mean? Are you talking Wynnum? Are you talking Brisbane? Can you expand on that for me? Happy to answer. That'd be great. So it was infill. So for those of you that don't know what infill, it's essentially surrounded by existing homes as well as bayside, so you're protected there. And a macro market in Brisbane. So ticks all the boxes, and yeah, great reward there. So in the next slide, Warren, or if you can share over, that would be great. It's these numbers we often when should I sell, or buy well never sell. And I want to show you what that actually looked like, because these numbers are great, but what does that actually mean? Sometimes it's the story behind the numbers. For example, some of these clients were, one of my clients in there that I shared the story with was a single parent. She, worked overtime. She's, really had to do many hours and sacrificed a lot to get that. Now this has allowed her, having over 300,000 capital growth. It's allowed her to pay off her, if she sold her home, she could be free, and also she's allowed, now she can run her own business. She's self-employed, so really doing really well. So we said, a couple of years ago, she's like, oh, made a few hundred, I'm going to sell. I'm like, don't sell. Please don't sell, because you wouldn't get it. And this is why, and we often talk, the power of property. If you're interested in wanting to create wealth through property, this is where we always say, buy well, never sell, because those quick gains can change your life in a short way. But if you hold on real estate, let's have a look at what this actually looks like. So one of my clients, Jane, she allowed me to share her portfolio. It's a really nice portfolio. So she's with properties, 5 cities, started all around there. So one of the ones that I showed you are 7, apart from the Wynnum West or Cannon Hill, which were 50%, 70%. But let's take a conservative value, even at 10%. You own properties on a $3 million portfolio. And you can see the market value there on the screen in the different cities. But a portfolio at $3 million, essentially, by year 15 is worth, at a 10% growth rate, is delivering you over $460,000 a year passive income from rent. So that's only at a 4% growth as well. Being a bit more conservative at 7%, because the market has been strong. I've shown you 10-year growths and how to pick markets that are going to perform. But at 7, at a more conservative, still over 300,000 passive income. Or even a more conservative year at 3 and 5%, as you can see on the screen. For those of you driving and listening, tuning in from your cars and waves, I will, but at 3% growth, it's still delivering 185,000 passive income and giving, 1.5 million. So that's really the power of holding property. Time is your best friend when holding real estate as well. So Warren, I do have a link that Warren's going to drop into the chat box. If you'd like to know a little bit more about this, or you'd like to discuss your own situation, Warren's going to put a link into the code. Thank you, a QR code if you'd like to book it in or chat about your situation, or if this is something that you're either doing or to do yourself with portfolio building. That's what we specialize in. That's part of the 6-star team with Jason and Helm. Along them, that's what we do. So this is thank you, with me this morning on your morning run. Many of you are on your work, I'm sure, and juggling a few things, getting ready. So if you do have any questions, feel free to drop them into the chat box as well. An average home, and interestingly, Adelaide is now more expensive than Melbourne. Certainly, it's some really, really solid growth happening most places in Australia, especially the capital cities as well. And we'll talk more about that. Jason will be back to talk about next week. But tomorrow, Kang is here to talk all things loans and finance, and he's got some amazing things to do with an update in the finance world. So good morning. Thanks for having me on this morning. I hope you got a lot of value about that, and for all your house and land success, set you up for success, and have a great day. Over and out. Thanks, everyone.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks.